Okay, good morning. Hang on, I need to grab the URL. Good to see you, by the way. Trying to get the URL for the live stream. Hang on. There it is. Almost done. Hang on, everybody. Good morning, by the way. Did I say that? I think I did. Got your coffee? All right. That should be good. Oh, one other thing. Hang on. Almost done. Let's get going. All right. That should be good. Looks like the processor's working. We had problems on YouTube a couple of days ago. Seems to be working fine now. So anyways, good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please, always stay small. Maybe I need these, huh? Stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Namaste. Today is Thursday, the 19th of April. Almost 2/3 done. 2018. My name is Wayne McDonald. I am the Chief FX Market Strategist. Look, it is me. It is me. I know I need a haircut, right? I know, right? My name is Wayne McDonald. I am the Chief FX Market Strategist for Traders Way. Nice to meet you. Been trading currencies for a very long time. I was just reading an old article. It was an interview that was conducted by Futures magazine. I don't know. I can't remember what it was. 14 years ago or 13, 12. Anyway, so it's just very interesting because they ask questions like, "How did you start? And what was it like?" And even back then, it was amazing. But anyways, I've been doing this a very long time, and I'm very happy and excited to share my experiences, good or bad, good and bad, with you, with the hopes that it helps you become a better trader sooner than later. This is a really tough gig, being a trader day in and day out. There's a lot that goes into it. Where's my YouTube? Oh, I see. There it is. And some of the things that you think are a given are not always actually very helpful. And some of the things that you think you avoid maybe are pretty good. So what does that mean? I don't know. But let's talk about it. Let's make you better, huh? Let's just agree to that. Let's all come together and make you a better trader sooner than later. Yeah. Now, if I do earn your loyalty and respect today or tomorrow or the next day or the next day or the next day through these webinars, would you be so kind as to visit tradersway.com and open a trading account there? That's how you show your loyalty and respect to me. You will find fast execution speed, competitive spreads, and world-class customer service on top of that. Cool. So again, thank you very much. I encourage questions. Please ask questions. If you want me to cover a particular currency pair, I'm usually happy to do that. If you want me to cover a technical analysis or a fundamental analysis question, or you have a question about trading history or trading this or raising this or doing that, please interact. Also, I like the feedback. I'm an only child, so I love the feedback. But I kind of need to know how these webinars are going. So if you could give it the old, I don't know, thumbs up, that would be cool. If you subscribe, what happens is when I launch these webinars, if you click the little icon that looks like a bell, what it does is it just pings you and says, "Hey, a webinar has started. Would you like to attend?" You just click a button and you're in. So all of that done. So that's it as far as housekeeping. The rest is Apple, coffee, and friendship. So let's get on with it. La, 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 la. Yeah. All right. So I'm trying to lean back a little better these days. Lean back. Ooh, that's better. Okay, yeah. So here we are, the 4-hour USD kitty CAD. And remember, yesterday we talked about the dangers of trading a trade that is dead. Okay. Marina's like cigars. Oh yeah, I guess that would be good with the coffee. Not with the apple, but yeah. Anyways, yesterday we talked about the dangers of trading a trade that should be dead. To me, this was dead. We sold it where we were supposed to sell it. It went to where it was supposed to go. It went a little further, which is down in here. And yesterday I'm like, look, I understand. It fell hard. It fell fast. It looks like it's going to fall forever, but that's irrelevant. And I hope that comes across, guys. That those situations, if it's going further, it's irrelevant if it's outside your trade plan. And generally, your trade plan should be around predictability. Right? So anyway, so here we are. It went down to the next monthly pivot and then just complete stop and reverse. Now, if you wanted to trade it north, I would do something like that. Okay? I'd probably look left. Okay? Something like that. I'd look at psych levels, see how we're at 26. Yeah, so if it came down to 25.80-ish, maybe it turns around and bounces up. And that's what I would do if I was a bull. If I was a bear on this, it's one of these things like, I understand it's bearish, you want to continue. But even then, let's talk about technical analysis and price action. If you're a bear, are you looking for a higher high to sell? If you're a bear, are you looking for a higher high to sell? No. You're typically looking for a lower high. So even then, you know, I look at this and it's garbage. And usually when you trade garbage, you know, it's garbage in, garbage out. It did come up and hit this pivot point, huh? You notice that? Like, here's the weekly central pivot point. Like, that has to be what's going on, right? Am I right? Yeah. So, there is pivots, but I don't know. It's one of these things like maybe if it's just dead, it does things like that. It goes a little too high, goes a little too low. That's why you should be on better trades. And I tried to explain that yesterday and the day before and the day before. And even the day before that. It's down, know when to hold them, know when to walk away. Shuran Tucker got knocked out with 1 pip. That's happened to me. You know, hey, if I had $1 every time that happened to me, Sue-Ann, I'd be rich. So, euro dollar up to the R1. That means at best it goes down to the S1. I'm just not that into this. Okay, I would prefer up over down, but that doesn't look up to me. And in fact, this top, and I guess you can count that, this 1, 2, 3, 4, 5 top, this pentatop, is all very logical resistance. And if it's held 5 times, that means bottom of the range, right? And we saw this about a week ago, lots of sideways potential, right? A lot of sideways potential on a lot of things, and it seems to have occurred. And that's just simply getting a read on market conditions. And then ideally what you're trying to do is line up your trade, your trading strategy with market conditions. Okay. How's this quirky bird going? A little bit hopeful, right? Bottom of the week is currently weekly central pivot. Right? Which is also the monthly central pivot. But what's, I think, more important here is the bottom of the month is the monthly M2. Okay, this is a step up, isn't it? So on a more macro level, what's happening is just simply up, down, and up, matching this one, okay? Now, we talked a little bit, maybe in regards to Canada yesterday, but you know, how one thing leads to another, and you start to get things like, you know, rally in commodity currencies and such. Have you been watching things like copper? Huge moves in copper. Copper is used for building buildings, plumbing, electricity, and all that kind of stuff. So that could be a leading indicator for expansion, business expansion, economic expansion. Okay? And that would lead to more demand for commodities and energy from places like Australia and Canada, right? In fact, I don't know if you can see this. This is copper. Where's my mouse? It's a problem. My screens are so far away. Okay, copper is up to like 2,800, and it was 2,400, you know, a couple of months ago. So, anyways, yeah, aluminum, iron ore, copper, and 10-year T-note, but not in price, in yield. So what does that mean? It means bonds are falling. I know technically it's treasuries, but let's just say the bond market versus the stock market. Bonds have started to fall again. We keep getting close to 3.0% on the 10-year, and then it keeps dropping back. There's another move, and every time there's another move, I think we're more likely to break it. And if we break the 3.0 level, you'll see things, you'll see consequences in the market. It's a big deal. And here we are moving over 2.9 again. And at the same time, iron ore is up, right? Copper's up, aluminum is up, and you're like, what? Bonds are down. Stock market's up. This is all positive global macro in one particular way. And what I would like to see out of that is, you know, commodity currency rally. I'd like to see USD, Swiss franc, Japanese yen weakness. And then the EM play I set you up with several months ago, where I'm doing some high yield stuff too, right? Why not? Because you get to talk about it at parties. What do you do? Oh, I buy and sell money, specialize in emerging market high yield currencies. What do you do? Oh, middle market. Yeah. You have a nice cube? I saw a picture the other day of people working at eBay, and they were trying to show how like awesome it is. It was two people sharing a cube, one on each side. Like, you don't even get your own cube anymore? Oh, man. You're like, look at me. I'm so rich. I make $300,000 a year, and I live in a tiny apartment because I can't afford to live in San Francisco. And you're like, what? That's how it is, though, for everyone. I have a friend who lives in a $7 million house, and it's nice. Yeah, so yeah, I guess, right? You're like, wow, 7 million's a nice house anywhere, you'd hope. So it's just funny how you got to price everything in real terms, right? Sharing a cube, oy vey. Yeah, Mike, that one's a good one too. I really like that. That's if you're a bond trader. That's a great one. Yeah, but right, or you trade against them, right? You're like Mike's like, sometimes I lend money to governments, and sometimes I tear the governments down. depending on how I feel that day. Yeah, anyways. So that's that. So that's what's going through my mind. And then you see this move, this move, this move. It's all the same thing. I'd call this like a daily chart. I'd call this like a 4-hour chart. I'd call this like a 15-minute chart. They're all the same. Fractal geometry. So you have to decide, are you on that clue train or not? Are you on that move or not? And by on it, I don't mean necessarily in a trade. I mean just psychologically, because if you see that and that is your strategy for this, it should be the strategy for many different things, right? I wouldn't like switch over to USD CAD and isolate it like it's something new and unique. It would have to be the exact inverse to Aussie dollar. Okay. All right, so we got to look at crude. How did I do on this? That looks pretty close to perfect, no? Yeah? See? We? Oh, it might have been dollar weakness though, too. Huh? That's hot, right? Come on, give it up. Give me the thumbs up on that one. Come on. Come on. Look at that. Thank you, Marina. Yeah, oil's good. Yeah. Every time it moves a dollar, you make $1,000. What's not to love? All right, come on, guys. There's 82 people watching and only 21 thumbs up. Come on, don't be a lurker. Put in the big effort of clicking the like. Come on. Don't be a holdout machine. Better come clean. Your therapist will think that you're making progress. Come on. All right. All right, 2 people logged out. That was too much. I was treading on thin ice. All right. Now there's only 79 people. How funny. Oh, that guy. Yeah. I mean, look, you don't like me begging. Do you think I like me begging? All right. Anyways, that is an area of concern, right? How many people can confirm we've been talking about $70 a barrel for the entire month of April when we were down at 62? Huh? An $8 move we set up 3 weeks ago. Yeah. Marina's like, hell yeah. Yeah, I mean, right? And here it is. That's all it is. And then if you back out a little further, it's just the continuation of last month's trade. Right? I mean, look how beautiful it is, guys. Up, 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 down, down, M2, long, and then what? Up, 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 up. Love it. Look, one contract is $8,000 on that move. But if you had 100 contracts, that would be $800,000. But if you had 1,000, maybe 10,000 contracts, you would have made $80 million on that. That's the Don Lapre sales pitch. I don't know if anyone remembers Don Lapre from 1992. This is our gold bugs. Yeah, Don Lapre was a guy, he said, if you take out advertisements in free newspapers that they, the stuff they throw at your doorstep and you use it to line your bird's, cage. He's like, if you take out a free tiny classified ad and you sell something for $1, then it's right. Now you have $1. But if you take out 2 ads, you have $2. And he's like, well, why not have like 100 ads? You would make $100 a day. But if you had 1,000, 10,000, a million, if you took out 1 million tiny classified ads in 1 million newspapers for free and made $1 a day, you would make millions. I'm like, oh my God, that would be a very difficult thing to do. Call 1 million newspapers and take out 1 million tiny classified ads. But I love the math of it. Okay. This is where we are on this move on gold. I don't know if you remember doing this. This Pegler pitchfork, I call them. Oh, by the way, I had a wonderful conversation with David Pegler the other night, maybe 2 days ago. Anyways, going back to this. Big macro move now. So the bottom of 2015 was a 50% Fibonacci retracement. And from that, we've made a pitchfork channel line. Okay. And then we'll see if it continues. But I'm just pointing that out as, a trend we identified 2 years ago, 3 years ago. It's still on, man. It's still on. Game on. But now we're tiptoeing up this and we're watching, right? Watch it, wait for it, wait for it. What's the bottom of the week? Okay. Bottom of the week is M2. We're above the central pivot. We're making higher highs and higher lows. So gold just might be doing this. Back to the central. We just kicked off the central after a higher high. Right? If that is plausible between today and tomorrow, we head up there. That seems like the velocity is a little too much, but that's the theory anyways. That's what we would have thought on Monday. Okay? Right? So the swing traders would be all over that. Even if you're a bear, I'm looking at that, you'd be all over that. There's a clear swing low if you're a bear. Very, very clear if you know how to swing trade. So you'd be watching for it. In fact, you'd be doing the lower high, lower low scenario right now. You'd be setting up a 1, 2, 3 hammock type thing if you're a bear. But okay, let's open this up to the crew, to the team. And by the way, thank you. 47 thumbs up, 84 people watching. Thank you for that. Half of you enjoy the webinar and the other half are not ready to commit to enjoyment. Okay. Let me know how I can help. If I could cover a particular currency pair, please let me know. Or if you have a question, please ask. Yeah, thank you, Ben. Ben, we got to get you funded. We got to get you on a currency pair. I want to get serious on that next week. But maybe we can meet up tomorrow, huh? Okay. CAD yen, CAD yen, CAD yen, the beast, Kiwi, USD, lots of USD CAD. It's amazing to me. Let's go back. Okay. Amazing to me. One of the messages I shared with you guys yesterday regarding CAD is that CAD yen trade is over, CAD Swissy trade is over, USD CAD trade is over, and Aussie CAD looks mediocre. Okay? So, guys, like 2, 3, 4 people asked about it. I'm like, where were you yesterday? Stop trading it, stop trading it, stop trading it. This, find something better to do. Okay? And then go back and watch yesterday's video because I spent like, I don't know, half an hour on at least one of these. You know, we had a very detailed discussion, I think it was on USD CAD, where, yeah, it's falling fast, it's falling hard, stop trading it. Okay? So, yeah, I hope that doesn't feel like I'm avoiding it. Well, I am avoiding it. Watch yesterday's video and I gave you a half an hour reason why you shouldn't be trading it. How about that? Yesterday's video was excellent. Oh, well, thank you. Appreciate that. Beast. Okay, Beast. That is the pound yen. We'll do pound yen. We'll see. Okay, you ready? La 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 la. What do you think of that? These are the areas of resistance we identified. I think it was Tuesday. I think we analyzed it here yesterday. Okay. I said in here, based on where we were, you have to decide one way or the other what you are. I think this is a very dangerous place to be trading because you're in the middle. Okay. All right. So a bear is setting it up to sell. That's fine. What would a bear be looking for? A step downs. So we're riding the 21. We're stepping down to the 55. If it headed up back to, let's say, 154, I'll put that on so you can see it. Okay. Whoa, 154, 152. Well, I guess we got some room on that. What I was getting at is if it double topped or lower high'd on you, you have permission to sell it on the smaller time frame. So you have like this potential move, which is usually more likely, okay, to turn the ship around. It usually takes a lot of effort. I generally don't expect quick reversals. But the other way to trade this technically, though, is you look for a retracement in here. Okay. And you set it up on the smaller time frame here. Okay. What I find, though, is when I look at how other people trade, very often they set this up on this time frame, like an hour chart, a 15-minute chart, whatever the case may be, but they forget to look at it on a 4-hour and say there's a down and up and a down again. So you got to be ready for that. Okay, you might get this pattern, then there might be 100% retracement. And on this, we're talking a 100 pip move. So then often the people that set this up on the smaller time frame, like a 1 minute or like a 15-minute or a 1 hour, they give up because of 100% retracement, and maybe even worse, start buying it, and then it comes down and it steps down again. So it stepped down from the 21 to the 55, then a double top, and then step down to the green area, which I call the 200, right? So right, up, 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 step down, double top, step down, right? And then probably lower high, lower low again. Okay. So don't just do it here, and if it fails, give up. I would be ready to sell it right here, right now, just below 53,000, 153,000. Okay? But the trade that I'm making is only this one. Okay? And it could easily fail, and we head up 100 pips. So be cognitive of that and manage the risk appropriately by moving your stop or whatever, okay? You understand? So you take a shot, right? And sometimes you do it just because it's there. It's an open shot, take the shot, right? You're open, take the shot. Why might not make it? Well, you're never going to score then, right? Take the shot, you're open, shoot. So it might be one of those situations where there's a shot here, and if that doesn't work, you're expecting not even a retracement to the top of the channel, but you're expecting 100% retracement to the top of the resistance, right? So there's your plan B, really. Okay? And you probably want your stop above the channel because there's a channel, it may do something like that, right? I guess that's fine. I'll do it this way. Okay? Okay? Oh, and I guess I should mention, like I did yesterday, there should be no buyers left in this. Does that influence you at all? Okay. And do you remember when I drew this for you? I mean, this, right? This is supposed to be down. Even if it goes up, you're not supposed to buy it. I hope you fully appreciate that. You know, we did talk about it 24 hours ago. That hasn't changed anything. Okay? Know when to hold them, know when to fold them, know when to walk away, know when to run, right? This is one of those things, like as a bull, you should have bought it down here. We talked about it on the first day of the month, and probably once a week we've gone back over it. It's too bullish. You had to be very careful on this one. We expected, because it opened bullish, to hit the target early, and now you're susceptible for it to head all the way back down to the central. That's the bullish point of view. So you should have ridden the moving averages to the target. Then you should take your profit, stuff all your pips into your bank account, and stop trading. Well, but it might. What if it goes up? You're supposed to be done as a bull. So the only thing you're allowed to even consider now is if you're a bear. This first move is stop hunting. The second move is literally a collapse. Yeah, Kyle's like, what a novel idea, right? But it's so hard. Like, and it's funny though too, right? Like, where every day we cover stuff like this, where like yesterday I'm like, stop trading this. Maybe 2 days earlier, I'm like, stop trading this. A week and a half ago, I'm like, look, it's on its way up here, and if it gets up there, stop trading it, right? So now people are like, Wayne, what should we do with pound yen today? Like, well, it's kind of the same as yesterday, the day before, and a week and a half ago, and what we predicted on the first day of the month. It's now the 19th day of the month. It's sort of the same thing. We hit 154-ish. If you're a bull, stop trading. If you're a bear, set up the short. So how do you set up a short? Double tops, lower lows, lower highs. Well, it seems to me that we formed a top. Seems to me we formed a lower low. So shouldn't we be forming either a more macro double top where it lowers and then comes way up here and then falls? Or the typical move, what's typical is this. So lower low, lower high. Well, wouldn't that be where we are now? Yeah. Easy. It's easy stuff, right? It's ridiculously easy if you have a trade plan. And yes, we talked about it on the first day of the month, right? The first week of the month, the second week of the month. We talked about it this Monday, right? Yesterday for sure, because I even drew this up there now. And it's the same today. You're not allowed to buy it. And if you're going to be a bear, you should probably start on the smaller time frames now, right? Right? So you should be selling this on a 15-minute chart or a 5-minute chart. And lo and behold, that's it. There you go. It's cool though, right? But that is how you trade. So now it's like if I'm a bear, I want to sell this high or I want to sell this high. Which one? I don't know. I'm not in control of that. I only know my price. So I'm either going to sell here or I'm going to sell there. And I'm going to start this one on a 15-minute chart. So sometimes you start on a 4-hour chart and work your way down. What I've been saying is, no, you start this one on the 15-minute chart and you work your way up to the 4-hour, because the 4-hour is still going to be bullish, let's say, right? So you don't want to keep buying. So you got to reverse engineer the thing and say, well, it's supposed to turn bearish, so I will be the one helping it turn bearish. So this one you're stop hunting. The second one you're actually setting up bears. Okay, so I would assume the 153 area would hold, and you want to be short as close to 153 as possible. I think we just hit it in the last few minutes. Yeah, check that out. I mean, like, okay, well, I'm sorry. It only went to 152.95. All right, it didn't go to 153. Yeah. Was that tone too harsh? It was too harsh, wasn't it? It's like a slap. I apologize. Okay, give me another one. How can I help you? Aussie. Okay. First of all, should Aussie yen be radically different? No. But let's see how the macros. So remember, like, a lot of these pairs were quiet. Okay. A lot of these currency pairs were quiet the last few days, but we talked about more interesting moves, right? And so here's one. Seems like to me I had some sort of plan here, right? All right, let's go back over our old work. Okay. This looks like I was showing you Fib Wars. Ooh, that's interesting. All right, so let's go back to how to be a trader. Okay. The first day of the month, this is a buy. Okay. First day of the month, this is a buy. So if you're a bull now, okay, this should go from here to here. Now, why is that important? Even in hindsight, let's say, even though that was 3 weeks ago, why is that important? Because we're trying to understand the mental and emotional stability of the person that bought it here, and 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 the person that bought it here. They expect it to go to 85.25. Right? They're hell bent on taking this to 85.000000000. Okay? Hey Highlander, did you get your account up and running and funded? Did you get the trading team stuff all taken care of? Like I said, I want to I want to get serious next week on the trading, on the fund. Okay, Charles Ben lost it. Okay, so we have to understand that that's where we're going. Okay. And now we want, okay, this, but it's not going to be easy as a bear. So you have to have your prices. We have a monthly R1 above us. Okay. And we have a weekly M3 where we are now. So as a bear, the 618 I have off the monthly, you can bring it up here. It's the same thing. It just makes a double top instead of a lower high. Okay. Which means maybe you'll get the lower low, lower high first. Okay. Like down here, and then it rises up and down. That's only one sell for a bear. Okay. Well, okay, Highlander. So remember, a trader's way, put the 5,000 in, and then when you hook your account to MetaTraders, then we'll bump you up to 25,000. Really, no sound? Let me check. Everything is running well here. Processor speed is fast. We're live. We're not recording. CPU usage is only at 22%. Should be fine, guys. Yeah. Yeah, Marina says sound is good here. And it's South Africa. I've run into the weirdest problems with South Africa, and one of them had to do with one of the ISPs in South Africa didn't have a setting on their server set correctly. And it was causing problems with only people from that area contacting, somehow using the website. I forget what it was, but just people not using that ISP couldn't do it. I just remember it would just be ridiculous. Right? South Africa, again, such a wonderful place with wonderful people, wonderful food and culture and natural land and resources and art and all that kind of stuff. But PayPal account, too difficult. Yeah, too difficult. Anyways, so if you're a bear, guys, you have this option to take it down, or you have the next one where it comes up here and you take that down. A weekly R2, monthly M4, I'd sell that all day, every day, if I was bearish, especially, right? But a double top on this level for this monthly reason, definitely sellable if I'm a bear. And that's what this whole thing is about. But if you're a bull, you buy dips. Here's a dip, here's a dip, here's a dip, here's a dip. See how they're using moving averages? But they're also using weekly pivot points. And it started on a monthly pivot point. Then what? Up, down to the weekly central pivot, which still kind of predicts we should go up here, right? And this R, monthly R, to a bulls, they're thinking, okay, I get it. This was a take profit, but that wasn't bears selling. That was these bulls taking profit at an R1. But it's not the market falling. It's just price falling because all the bulls took profit. Look, we were outside the weekly target, stretched our necks out, got the monthly R1, take your profit. Wash your hands for dinner. Go enjoy the weekend. Go to the pub. That's what this is all about, guys. You have to be intuitive to what's going on here. And then what? It retraces back to the weekly central pivot, monthly M2, but this time not as, M3. Monthly M3, but not as resistance, as support. And going back to this 3 weeks ago, it's the same people that want to buy it here that bought it here. And why would they buy it here on this retracement to a monthly M3 weekly central pivot point? Why would somebody buy that? Okay, let's reverse this whole thing now. And it's important that you understand the other people in the market. If you can, you'll get better at identifying support and resistance, right? So, let's just kill all that. Let's just do it again. So what are these guys thinking? Well, they want to get back in. They want to look left. Look, I already have it drawn for you. We've already done all this. I have it drawn for you. You bring it across. Then there's the monthly pivot. There's the weekly pivot. And you have a retracement. So what's the plan? What would this guy do? What would that gal do? What would this person do? What would that hedge fund do? They buy the dip. And we already know the target. We knew the target the week before, and the week before that. It's the same target. Right? Now, do we know if that's going to work out? No, but that's just what these people are thinking. And then the opposite of that, where would a bear sell? Well, they sell the typical things like there might have been a sell here. That didn't happen. There might have been a sell here. It happened for a while and then failed. Okay. There was a sell here, stop hunting. It worked for a while and then failed, right? A double top would be a very great sell. And this up here would be a really good sell. So like there are opportunities for bears, but what happens is if your market condition, if your trading strategy doesn't fit the market conditions, you'll get fewer opportunities to trade. And when you do, you still might make money, and just you're not going to get rich, right? This would have made money. I mean, look, this is a 4-hour chart. If you sold it on Tuesday afternoon, it was still bearish on Thursday afternoon. I mean, you were right for a couple of days. This one, look, you were right for 3 days. Like you could have sold it way up here at the monthly pivot. Remember, we knew that 3 weeks ago that this was resistance. So you could have sold it at 84. Oh yeah, well, it only dropped 100 pips. Well, look, you could have made money there too, but you were wrong. And you know to take your profit quickly in this situation, because you're a bear in an uptrend, for crying out loud. What do you think, you're going to make $1 million selling in an uptrend? So, if you had an opportunity when you drop it from one monthly pivot back to the next, take your money. Well, if you're buying in an uptrend, hold it longer. Don't be short for 2 days, or in this case, long for 2 days. Be long for 2 weeks if you can, right? So now if it dropped here, you're going to squeeze all the bulls out, and then you're going to have lower highs and lower lows and all this kind of stuff. And now the top is a monthly R1, so the target would be monthly S1, but there's not enough days in that, so really you have to start using next month pivot points, and it complicates all kinds of things if this does drop. But I can tell you, knowing the market, meaning knowing how to trade, if I can grab this now, as I expressed like 72 hours ago, if there is a bear out there in this world, in this bullish world, if a bear exists, they're going to sell there. It may not work, but that's where they would sell. Why? I know how to trade. And then what about the other one? If it went up here, do you understand how awesome that short would be? Even a bull, I think, would want to take that. I mean, oh my gosh. I just, can we do that between today and tomorrow? Maybe. Okay. Cool, right? You see a similar look. Can you see how that could be a double top? So how do I know? How do I know whether it's going to be a double top or not? I don't. So if you think that looks like a double top, you should probably trade it. And then you put a stop above here, and you're done. Okay? What's your target on a weekly M3? Weekly M1. Take a shot. Put your stop. Once you get past, if you make a lower low here, okay? So like, let's say you trade right here, short. Your stop would go up here somewhere, right? Once you get down to here, move the stop to break even. okay? Because it could come all the way up and you want to get out. If it makes a lower low, come on. If it makes a lower low down here, low relative to that low, okay, then you want to take a second shot here, okay, right in here. I'll mark that with an X kind of, well, X kind of thing, okay. And then if this gets lower down towards the central pivot, move this stop to that break even, and move your second stop to break even. Okay? And if you're worried about this also being a monthly pivot point, then take the profit from this and take profit from there. So you're selling at, what is this, 84, and now you're at 82. So take your 200 pip move here, take your 100 pip move there, and you just made 300 pips. And if you're wrong, it does this, right? And knocks out that stop you had here. And what do you do now? Let it go to the next level like I already identified for you and set up the short around 85. Cool. This is the same pair, Aussie Yen. I just brought up a different chart with different pivot points to show you the same thing, but maybe from a different view. Okay. All right. So can I get you guys to subscribe to the YouTube channel? Because what happens is the next time I do a live event like this on YouTube, you get notified. Just make sure you click the little bell. If you enjoyed today's webinar, please give it the thumbs up thing. And other than that, I will